Monday, June 24th, market analysis, Stan Ehrlich. Good morning, 10:07 California time. I've got a little trouble with some of my data feed out of New York, getting a little worse than before, so we're going to have to make do. I always start out with the stock market indexes, as you know, and we've got some downside progress on the bearish reversals that we got on Thursday, the day after Juneteenth. And some markets were trading at the time, some weren't, indexes in particular. So we'll talk about that. But today I'm going to concentrate on a fewer markets than I usually do because I don't have a real-time data feed in some cases. And I don't like talking about something unless you're looking at real time, which you always are. The E-mini at the moment is up a very small 3.5 points, hardly anything, about where it opened. It did get a little higher than Friday's high after Thursday's bearish engulfing sell signal, which hasn't had any downside new low closing, especially progress yet. But I don't mind a little rally back into approximately the middle of the range of the reversal day last Thursday. And then Tierra del Fuego, head south, land of the south. The 1 minute chart for the E-mini shows us that in the last several minutes, it started to work its way lower out of what was kind of like a pennant formation, not great, but new lows for a little while. I really want to see it break this yellow line down here at around 55.20, because that would be breaking into new lows for the last couple of days, today and yesterday, and below Thursday's low also, the bearish engulfing day. That was our ER1 scalp trade on Thursday for the E-mini September futures contract. Now, so far so good. Again, including this rally, which I don't mind to be approximately halfway back. I'll start running the strategy tomorrow after I get other data feeds going. The spider did have a bearish engulfing sell signal on Thursday relative to Tuesday's price action. The E-mini had an outside down day relative to not only Wednesday, Juneteenth, but also the price range, which is a normal one on Tuesday, the day before the holiday, last week. So it's fine the way it worked out. Next, spider. Here's your outside down day on Thursday of last week. We had a small day trade loss on our ER1 with the particular kicker we were using, which is the speed at which the yellow dot, which is our trailing buy stop when we're short, comes down. We didn't get as much follow through the downside as we did on some of the other indexes. So the spider 1 minute isn't doing anything wrong. There's no major new high. Bumped against resistance earlier this morning, excuse me, and started to turn down. I hope it keeps going. Next, QQQ did have a bearish engulfing. That's how it looks with a regular candlestick chart. Strategy's not running at the moment. Has worked lower the next day, Friday, and again, a chunk lower today. Doing just great. Now, there's a different situation here. We've got a gap to close. That would be from the high of June 11th to the low on June 12th. There's a gap on the charts. Old-fashioned gap. Gaps are usually closed. Implication. We're coming down to 467.92 at a minimum, and I don't think it's going to stop. I think it's going to go at least down to 460. And frankly, I'm looking for significantly lower, 447, and I can't rule out something lower than that. The bearish engulfing we had on Thursday looks like it could be very profound. You can't tell until after the fact. You got to say it before it happens. If I'm right, I hope so. We had a great day trade scalp on Thursday on the QQQ. There it is. And there's the red when the signal developed, and the onset of the short-term scalping short position on Thursday at 7:24, give or take a minute or so, a.m., 7:20 a.m. Got out at 11:30 the same day. New lows the next and the next. I only have the scalp version turned on. I expect the overnight version, I'll show you tomorrow, has still a short position on the books and has not been stopped out and is a lot more profitable and looks like it's going to be a chunk more because it's already down 2.52 at the moment. I don't see it stopping. I see it breaking today's lows and going lower. The QQQ or the NASDAQ is leading the way down. The NASDAQ futures contract daily data has a bearish engulfing on Thursday of last week, just like most everything else. Working great, as you would expect, with the QQQ doing the same thing. And I'm looking for maybe new lows for the day. For the NASDAQ September futures, minimum 19,277. Probable 18,866. Potential, well, I'll just say lower. NASDAQ September 2-minute chart. We need, there we go. We look like the next thing to do is to make new lows. We already had a rally back up to some resistance and stopped and turned down. Tons of time left for the day. Now we're looking at Dow Jones, different story. I find it rather amazing. I'm sure there's some kind of fundamental reason. I really don't care why we're seeing the Dow Jones futures stronger and the other indexes weaker. Literally a new low for 3 days in the NASDAQ, while literally a new high by a substantial amount in the DIA. But the DIA or the YM has a double top. That's the dominant formation. We have not broken below the lows between the two highs. If that happens, and I do expect it to happen, we're going to see a downside objective of 35,066 or more. But we just became overbought today. Hey, look at this. First time since the last time we were overbought, with the sell signal on the top of the market on that day, exactly the high, 520, and a sell signal on that high. We caught both highs of a double top formation in the DIA. Great trades in themselves, telling you a potential double top may occur, developed but didn't break out. We need that close below here, right there, that low. And this is a bullish engulfing at the bottom with the green circle around it. All three significant turns, except for our last one here on May 30th. I can't keep up that record very well. So I'm looking for this little blow off top on the 5-minute chart to be maybe the end of the rally for the DIA. Everything that should start breaking down below previous lows, below weeks with the previous lows, below the lows of the last couple of weeks, and that's the major breakout here, 38,698 on the YM. The Russell, 2 years with resistance has stopped it weeks and weeks ago. It's dribbling down like everything else. I think it's going to test 1947 next. The 5-minute chart looks like it blew off. New highs, but didn't hold. Sinking into minor new lows for a little while. I'd love to see it drop off a lot more. Bonds. Nothing happening today. Very doji-ish. About where it opened, a little higher. Net lower on the day from close to close. Notes, same thing. Now, this has all been Chicago or futures contracts that I've been showing you. So I've got the data feeds, the real time for all that. But when it comes to crude, no, I'm going to pass. Natural gas, very sorry. Heating oil, New York, New York, New York. Gold is New York. But I do have something to say here, because the dominant formation is this double top I've been talking about for weeks now. We had a false downside breakout. My guess is, and it's a pure guess, I don't know what it's doing today, is that we're close to a rally high or starting to turn down. We didn't get overbought, but I think it should be turning down very soon if it isn't starting today. I have to say the same thing for silver, but this time I have a shoulder high pinpointed. Tomorrow, 31.29 or 31.30, give or take a little bit, and I'll give it a day or two to the right or left. So we're in the time frame. If there's any rally high in this circle, hopefully in the dead center of it, I'll be tickled pink if it turns down directly. And wow, I will have pinpointed this last shoulder high and a head and shoulder top that has a pretty good downside objective, probably down to major support 22.5. Next for platinum, no real-time data today, but same story, same circle, but adding to it a significant resistance area beginning. Watch out for platinum and silver. Gold's going to follow almost assuredly. High-grade copper, sorry, no feed. But in Chicago again, live hogs, cattle, or soybeans. I'm sorry, soybean oil meal, and then corn, and then cattle and hogs. Now we have a bullish engulfing. If it was oversold within the last few days, I would have gotten a green ER buy signal. This is not green because it's an ER buy signal. It's green because it's currently trading above the opening, and you've got your standard candlestick colors showing. None of my strategies are running at the moment. But it did reach on Friday my minimum downside objective, and when I made a minor new low this morning, it's now even trading above Friday's high. This looks very interesting. The potential, I think, a little more strongly likely the beginning of a good rally that could develop into something huge. Now, triple bottoms, which this looks like at the moment, are very rare, but hey, it looks like it at the moment. What about soybean oil? Not the same story. Low and last, down 43 ticks, but in an area of support. It could afford to even drop down to 43.25, for example, and maybe get oversold at the same time. That would be very interesting if we get a bullish engulfing at that price in 1 or 2 days in oversold conditions. So I'm still looking for a turnaround here to turn back up. Meal's doing fine. Rally high, high and last, up 83 ticks. Can't say anything wrong. Like what I see. Looks like it's going to close in the new high closing price for this last 2 to 3 weeks. I'd love it if it closed above the previous rally high of 359, 358.70, whatever. And that would be the best short term for a rally. But I keep mentioning there's a double top with a sell signal and a second high, perfect, great decline, downside breakout. Only support has turned this up some, and I'm still having this thought. We really should be going down to 325.40 before any significant rally. So maybe this won't have follow through. Next, we got corn. Spike bottom, maybe. Down close to the lows that we made in late February 26th, which is a bullish engulfing. We bought the bottom so far, and this is the closest challenge to that statement we have had now in late June after February 26th buy signal. So will we double bottom out? We got oversold today for the first time. The market's fairly well off its lows. I would be tickled pink to see it close above yesterday, Friday's high. I doubt that's going to happen considering where it is at the moment, but you never know. So that would generate an ER buy signal and a whopper. But again, all I can say is oversold conditions, previous lows, support, prime target for a turn, just not doing it yet. We got wheat, oversold very much so, down to 13, today's lows. Bouncing off a little support level. I do a single line off of a previous important low. So we did buy the bottom in meal. We got 2 bullish engulfings. And the September wheat contract at the lowest low for the whole darn move. Actually, I should move this circle over here and elongate it a little bit because that's not on the lowest low. Both are a buy signal, but that's the one that really counted. So could turn up at any time. Long-term bullish potentials. Cattle jabbed itself into resistance. This time it stopped at the top of the resistance area so far. Came back down to approximately the bottom of the resistance area and staying there, which was where the previous highs were. So it's kind of passing the test in new high ground, staying in new high ground. The close is going to be fairly important. We first got overbought today since the last time, May 29th. So maybe this is a turning point today. No reversal, too strong for that at this moment. Hogs dropping down sharply today, relatively close to its lows, not quite oversold. We haven't gotten down to the 25 level, but we came very, very close so far. We got down to 25.75. So maybe it'll form a double bottom. I don't know. I have to watch for buy signals in this condition. And that's it, ladies and gentlemen. I need to talk to my data feed people, Ninja, in order to get these other markets rolling for tomorrow. Have a profitable trading day. Sorry for the problems.